Hey everyone, this is Casey Stubbs with Trading Strategy Guides, and I'm going to show you how to trade with the RSI. And you're going to want to watch this video to the very end because there's a couple things that you didn't know that a lot of people have wrong that I want to share. And it's also going to be really important that you guys will leave me a comment because I want to use this video as a platform to interact with people. So please ask your questions, leave your comments, whatever you would like to say or share, I'd love to hear. So let's go ahead and get started on how to trade with the RSI. So the first thing is that the default setting is 14. And that's what we're going to talk about, and that's perfectly fine because this is a momentum indicator, which means it's helping you to identify trend direction and when trend direction changes. It's actually not good for overbought and oversold, which a lot of people think, and I'm going to break this down into a lot of detail so you're going to know exactly how RSI works. And so let's go ahead and just show you right here, right now, what I'm looking at, and this is 14 period. Okay, 14 period. And the reason I have this box highlighted is because the box is showing 14 candles. So there you have it, 14 candles. You can see there the RSI is a 14 period. So if you go back, you can see inside of this box, you can see that many of the candles, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 of the candles are bullish. Okay, and then the rest are bearish. And this one is kind of like red or bear. It's kind of indecisive. This one's very close to indecisive. So there's really 3 main bearish candles, but what you'll notice is more bullish than bearish, and hence we have the 58, which is showing strength. So the RSI is only showing, it's only indicating these candles. So if you're looking at the trend and you're like, wow, this is a big uptrend, which is true in this case, but the RSI is giving us no data about any of this stuff. About any of this stuff, there's no data. Okay, so really it's very recent data. Unless we change the setting, which you can see over here, the setting's 14. If we change the setting, that changes everything. Okay, so now I wanted to go back to a previous period. So you can see right here, even though the price is higher, the previous is 49. The RSI is 49 right here. And so, again, this current trend is a little bit higher, but the previous one was only 49. And so we have 1, 2, 3, 4, 5, 6, 7 bearish candles and 7 bullish, and you'll notice that it's just about flat in this period, and there you have the RSI. So the RSI in this case is saying that it's going flat, and you can see in this period it's going flat. Here the RSI is showing that it's moving up, and it is moving up. But it's not considered oversold or overbought until it gets over the 30 or the 70 level. So this is just some really basic stuff that I'm teaching right now about the RSI. Okay, so now let's keep moving. So now we're going to go into the overbought and oversold territory. So this particular RSI is 74, and you can see that we're right here, and you'll notice right here the price is moving up really strong. Okay. Oh, it's time to short, right? Because they say when it's oversold, look what we have. We've got it's oversold. Here on the RSI, we have a pin bar 1 and pin bar 2, right? Oversold and a red candle. Boom, time to short, baby. It's oversold. We're going to get a reversal, right? Well, not so fast. You know what they say, what goes up must come down. Well, not always, not always. Why? Well, because this particular setup, well, it ended up, this was the candle, ended up dropping a little bit. I mean, you might have made a few pips on it, but more than likely, you would have had your stop loss here, your take profit down here, and you would have made a big fat loser, right? Because it kept on going for a total of 221 pips. And that is why... right? That's why it's not good for overbought and oversold, and that's why a lot of traders fail, because they're getting bad info. Okay, they're getting bad info. They're saying, oh, when it's oversold, you're going to want to sell. So let me break this down on how this actually works and how we can use it in our trading. So again, I'm just previewing the same setup, but I just pulled back a little bit. So the 14 candles were very bullish. So if we see, again, remember, it's only 14 candles. So you see this massive strength. Look at this big, powerful candle, right? And we got 3 here. So it's very, very, very bullish, and it's showing what? Momentum, right? So this is a nice 14 candle move, and it's showing momentum, right? And so that's why they call this a momentum indicator. Now, let's go back to the very next setup, okay? Again, we just go into 14 candles, and it's showing some momentum, but it's not as strong. It's not as strong. And so let me show you what I mean here. You can see that we have it moving up, but it's not as strong of a move. And you can see, look, there's the RSI and there's the RSI. So it actually didn't quite, it just topped out. The RSI made it up a little bit, but not quite as much, okay? So now, you can see obviously that the indicator, because now the indicator in this period is going which way? It's going sideways. Here it's moving up, but in this box, the indicator's done nothing but go sideways. So it's actually done a pretty good job of showing momentum. It's showing that it's moving up a little bit, but not nearly as much as here. Okay, all right, so let's go to the next period. So in this specific move, it only moved up 63 pips versus the previous candle of 352 pips, which is a much slower pace. So does that make sense? And hopefully that brings some clarity on how to use the RSI. If it does, just leave a comment. Let me know what you think about that, because I really want to know what you guys are thinking here. And so then, now we're going to keep moving on. We're going to go to the next 14 days. So now we have the next 14 days. We move along. And the price hit a new high, right? Because this was our previous move. It hit a new high, but it was only a 50 pip move, and there were many large bearish candles. So look, there was this big, huge bearish one, and there was this big one, and then there was this one. So 3 really big bearish candle and then a little tiny one. But the bigger ones didn't really have as much momentum. And then it did make a new high right here, okay? But you'll notice something. You'll notice something. The RSI is going down, okay? Why is it going down? Why? Why would it go down when it hit a new all-time high? Well, it's because, look at the strength of these bearish candles. 1, 2, 3, 4 bearish. They're much bigger. They're much bigger than the bullish candle. As a matter of fact, in here, there's not a bullish candle that is bigger than the bearish candles, okay? And so it still went up, but there was more strength on the bearish candles. And so what is that going to be indicating here? That is because the momentum is now decreasing, right? So the momentum is decreasing, and the bulls are getting tired. They're getting tired, and the bearish is starting to begin to pick up strength, and that is what they call divergence. So that is called divergence. And so one of the things that we want to notice about this, if you're trying to trade a reversal setup, because that's what is happening here, it's going to require patience, because that chart that I showed you was about 35 days. And that's why they say don't trade against the trend. You can trade against the trend, but it takes time. It takes time for the setup to play. It takes time for a massive trend to reverse, unless there's some kind of major news cycle. It takes time for that to happen, and there's going to be clues, right? It doesn't happen on a dime, and it takes clues. And those clues were the RSI with those big bearish candles. So how do we trade this, okay? So how do we trade it? So actually, before I get into that, I want to just go back here real quick. So you'll notice, again, that now we have the divergence. What happens? The RSI is not here. It's not at a new high where this is. That's divergence. And so what happens? Well, if you draw a trend line here, boop, 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 ugly little trend line, it broke the trend line. Okay, so how do you trade that? Well, you wait for the divergence, and then what do? You wait for a trend line break. So right here is a potential entry with a stop up here. Now, this is not a massive move, but it is fairly significant. It's fairly significant because we have a support level right here, and it goes right back to the segment. So this is about 250 pips. I'm eyeballing this, right? So there's a pretty good setup. So that's one way to trade it, is just to watch it. When divergence hit, then watch your key levels. Okay, so if you understand using the indicator, watching the highs, and watching key levels. So if that makes sense to you, go ahead and leave a comment about how important these levels are. All right, now let's go back here to how do we trade this? Another way. So another way we can do this is trading this on a 1 hour chart, right? So we have the divergence, and you realize that, okay, I'm going to try to time this thing now for really tight entries. So what can we do? Well, we can short it on spikes, right? So once you have divergence and you realize that the bulls are starting to lose steam, every time it spikes up, you short it. Every time it spikes, you short it. So let's look at a chart. Right, so here we go. I just zoomed in and I highlighted it. And this is where the peak happened, where the divergence kicked in. So I highlighted it, and then I dropped to a 1 hour chart. So what we can do is, boom, a spike. Look, support was just broken here. This level, we talk about levels, right? Oh, it was broken. Now we have a new level. Boom, right? Boom, levels. Levels matter. Levels matter. Okay? Spike, 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 spike. Okay, so that's every time you get a pop up, boom, here's a spike. Boom. This one took some time, but boom. Right here's a spike. Boom. Okay, so we have our divergence play, and we can short this in a spike. Right? That's one way to do it. Now, another way is level breaks. I like levels a lot. I think levels are important. I like to use them with indicators. So I already talked about levels a little bit, but you see there's a level right here. Okay, it didn't break. Didn't break. Well, this one broke. How about a short here? So you could either do it on a spike, because we had a level break here, or we could wait for the level break. Okay, here's another level. Right here is a level. Okay, it broke right here. Oh, boom, nice move to the downside. Just draw your levels. Know where your levels are. Okay, price broke to the upside here. Didn't have a lot of follow through, but it did break this level. So we can use horizontal levels or trend levels. I like trend levels also. So you can see right here's another horizontal level, and it broke that. There's a trade, right? Oh, here's a trend line. Here's a trend line. Level broke right here. Not much of a trade, but here's another one. Okay, and excuse my lines, they're kind of ugly, but here's one. Boom, level. Right? Here's another trend line. Boom, level. So those are some things you can do. You can use level breaks or you can use spikes. But the key is to identify the divergence on a daily time frame and understand that the market's getting tired. Right? And that will help you trade this. So if that makes sense to you guys on strategy on how to do it, just let me know. Or if you have a question on something that I'm missing, I'll hit it up in the comments. I really want your feedback. Now, how would you like to see a shortcut to finding these? Okay, how would that sound to you? Well, we created a tool that might be interested if you use MT4. It's called the EFC dashboard, and what it does is it scans all of the pairs, and it lets you know. Okay, you just scan it, overbought, 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 oversold. Not too many oversold right now, mostly overbought. But, okay, now, then it scans. It says divergence, which is what we talked about, divergence. Oh, this one was an entry. Okay, this one actually hit the TP. So you just basically don't have to go through all the charts. You look at it, and then you run the analysis, right? So that's it's a nice scanner, and it's really cool, and it's not available anywhere else. Another thing that is included with this is the actual indicator itself. And you can see that it scans here, right? And so right now, here's a setup that just happened. The yellow means it's oversold, blue indicates divergence, and then green indicates an entry. And you can see here's a nice setup, went right up into the target, right? And again, this is for the MT4 platform only. And here's another one that we have. Yellow is oversold, blue is divergence, and then red is an entry. And it took a while, again, red candles indicate the sell. You can see here it took some time. It actually went up almost into the stop, but this is where the spike strategy could come into play. Short on the spikes, short on the spikes. So you could actually have multiple entries, but then finally it did hit the target. And so if you wanted to grab this or try it out, the link for this is in the description. It sounds pretty cool, but another thing that I want to make sure that you guys know is that you really should do this in the continuation of the trend, right? So, for example, this is a Euro Australian, which is in a very strong downtrend right now, and so I dropped up to a daily chart, and when it started to pop up, I'm looking for oversold. So basically, this is not so much a reversal, but it's a trend continuation. It's a reversal on a lower time frame. And so if that makes sense to you or doesn't make sense, let me know in the comments as well. All right, this has been a nice 16-minute video. Hopefully it's shed some light on how to use the RSI, or if you're interested in the tool. But anyways, either way, no matter what, I really want to communicate with you guys so that I know what kind of content to create. All right, well, thank you, and we'll see you guys soon.